This is Alan Farley from FX Empire. McDonald's is trading right near an all-time high. It posted very strong earnings last week and has been gathering some upside energy. Looking back, the stock topped out right above the 220 level in the second half of 2019, entered a modest correction, tried to get back up to the high, almost did it before the pandemic came along, and just crushed the stock, dropping it to multi-year lows. Now, the subsequent recovery took about 6 months. Stock coming back up to the prior high around September and then breaking out and holding that new high for just a couple of weeks before it failed and dropped into this rounded pattern. Now, if you look from here to here, we have a cup and handle pattern. It's actually a cup with a high handle. So it came back up to a resistance up here, closer to the 230 than to 220, and broke out. And this is the price action we've had for about the last 2 or 3 weeks. Now, my only problem with this is it looks a little bit too much like this. Sort of the same little channel to action that sort of rolled over and just failed back in 2020. So we'll have to watch. That's especially true because if you look down at unbalanced volume, it tells kind of a weird story. As you can see, unbalanced volume actually topped out many months after the high in 2019. Then it plunged and came back up about at the same pace as price. Tiny little breakout here in the fourth quarter, and then it also failed to break out just like price. The problem is that this unbalanced volume didn't turn the corner just like price did. It's still sitting down here well below the prior peak, and this is a bearish divergence. Now we could get some action or some failure down into about that range. Perhaps at the same time we finally get a few more subscribers to McDonald's, a few more buyers and shareholders, because this is also the potential cup and handle pattern. If we get an OBV breakout with a price breakout, that's real good, and we can see the stock head toward 300.